Let me take it across to Peter Cardillo. He's joining us today on the channel. Peter, appreciate you taking your time out. This is Ruchi Bhatia. I want to first begin by asking you the fact that the US Fed making it very clear that there will be 3 rate hikes going forward in the year 2022. Do you think the fact that the event is out of the way is one of the reasons that we're seeing a relief rally on Wall Street today?
Absolutely, and I think it basically clears the air for the markets, and the positive side of it is that the Fed has acknowledged that they were wrong about inflation, and now they are taking action to fight it. So that's good news for the markets and not necessarily negative, even though interest rates are likely to go higher next year. Not likely, but they will go higher. And, you have to take into consideration that we are at zero. So even if interest rates were to go up, let's say, by 100 basis points, that would not be detrimental to the economy, nor would that be detrimental to the market. The key remains earnings. And so far, earnings have been solid, and they probably will continue to gain traction. So that's good news for the markets. And I think that's why the markets are applauding what the Fed did yesterday. And you don't have to look at what's happening here in the States, but look what happened in Asia. Look what happened in Europe. Let's not forget that the Bank of England took its first step by raising a key lending rate by 25 basis points, and Lagarde basically said that the PEPs will probably end in March, setting the stage for a monetary policy change there too. And we look at the market's reactions, all positive. And if we look at what's happening in the bond market here this morning, we see the 10-year is actually down now, and it's at 143, down from 145 yesterday. So basically, the bottom line here is that the action taken by the Fed yesterday clears the air, and it removes any doubts from the markets of what the Fed may or may not do.
I also want to ask you on, the central bank across the globe had been saying up until now that inflation, of course, was a transitory issue. The same kind of statements coming in from the US Federal Reserve, the same kind of statements, of course, coming in from various emerging market central banks. Also in India, we've been hearing that inflation that we're seeing is going to have only a transitory impact. We will, of course, the inflation levels will become better. Having said that, do you believe it was perhaps a wrong call, and the fact that we're seeing high inflation mostly is on account of all sorts of disruptions that we saw during the COVID period, and add to that the unprecedented liquidity that we're also seeing in the markets?
Absolutely, I do think that the Fed, erred on this call. So did the other central banks. But in all fairness, some of this inflation is attributed to the pandemic, which caused bottlenecks and short supplies. So we can't rule that out. But if you look at some of the components where inflation really took off, such as salaries, rentals here in the United States, housing, that's not transitory inflation. So I think the Fed, I say the Fed, I'm referring now to the global central banks across the nation, across the globe, that the Feds took a chance and used that excuse of transitory inflation. Now, it may very well be in India. It may very well be in Europe. But it certainly was not certainly not all transitory inflation here in the States. And so I think, they played follow the leader, hoping to keep the markets calm. And the markets did stay calm. Of course, we had some, bumpy rides because of the uncertainties, but now I think they made it clear. And that's good news and not bad news.
Okay, all right. On that note, Peter, appreciate you taking your time out and speaking with us.